But is now the time to buy tech? Are they right?
So again, broadly, I think the answer is no. And this goes back to what Steve was saying and the previous conversation also about when do you buy. So if we look at tech broadly, Okta and Snowflake are totally different than Cisco and Palo Alto, for example. When you're buying right now, there are plenty of things out there to buy. And what I was saying before is I don't think you follow Citi and broadly plow into the U.S. market, nor do I think you broadly plow into tech. But what I said before is we are seeing asynchronous corrections, right? So there are big opportunities. I don't think if you have, let's say you've got $100,000 burning a hole in your pocket. You don't need to put the whole $100,000 to work, but you can do what I did last week and see Foot Locker, for example, down 30%, do your research, say, hey, this one's corrected, this one's at the right price, this is the right time now, and you can buy that stock. So there's different things that you can buy, but I just don't think you do it broadly, and you need to recognize whatever sector you're looking at right now, financials, healthcare, tech, consumer staples, you don't buy the whole sector in this year. You have to pick and parse through which stocks are the right ones to buy. And that's where I think you have a lot of opportunity. I mean, I, as a portfolio manager, I love years like this because this is when opportunity is created. Okay. And I don't think it's all at once. One thing Weiss said, he said he would wait till the market gets to 13 to 14 times. I don't think we're going to get there broadly. I don't think we're going to have a huge, massive collapse. So I think you need to be careful and buy individual stocks. If you wait for 13 to 14 times, you might miss everything.
So, well, just to correct that, Scott, if I could, I didn't say, I said that's ideally where it would be. It would overshoot, but I didn't say I'm waiting to get there to put money in.
Mm-hmm. No, understood, Steve, but by merely throwing those numbers out of 13 to 14 times, you suggest that you think it might get there. I mean, you can't just throw numbers against the wall just for conversation's sake. I mean, that at least is in your mind. And that would be pretty dramatic pullback from where we are now. As much pain as we've endured, you ain't seen nothing yet if you get to 13 to 14 times.
Yeah, no,
I mean,
don't
that's
disagree.
where we got
Steve?
Right. I think it's possible that we could get there because I do think, I'm not saying that is appropriate value, but the market clearly overshot in the way up. We got to multiples that we just shouldn't have been at. And Snowflake is the poster child for that. So doesn't it make sense with everything that's going on, with heightening issues with China, Biden administration talking about even a tougher policy against their companies, you know, that's not going to end well with China, with what's going on in Russia, Ukraine, with what's going on in this country, with what's going on in inflation, with an ongoing rate tightening cycle. Doesn't it make sense that the possibility is that we can overshoot the downside? And by the way, if you go to the long-term PE in the market, you're pretty much at 14 times. So that's why I say you can get there. It just can't be you overshooting the upside. It also is you overshooting the downside. Now, a lot of stocks have corrected 50%. So you just need some of the others.
Or more.
Right, or more. Right. And that may be the reason we don't get there, because the ones that haven't corrected are, I believe, not to generalize, but a lot of those aren't going to correct to that level. So that may get us only to 15 or 16 times.